Hello guys, in today's video we'll be covering more about inducement, of course major and minor, and also dive deeper into identification of order flows. And so without further ado, let's dive in. If you can clearly remember, we said that the liquidity resting above, in this case since it's bearish, the recently formed valid pullback on that impulsive move is what we call the inducement. And also we said that if it occurs after a break of structure, then this one here will be now the major inducement. But if it occurs before the break of structure, then that's a minor inducement. So in this case right here, we know when a break of structure is formed, of course, after the inducement is taken out. This one here is confirmed to be a swing point. And so if price reverses and breaks past this swing point, then our break of structure is confirmed. So in this scenario, the inducement here is a major inducement because it occurred after the break of structure. So this one here is our major inducement. And also remember the order flows, we mark them on the impulsive move. This one here is the corrective move, and this one here is the impulsive move. So both the order flows, the order blocks, everything, we usually mark them on the impulsive move. The engineering liquidity, the inducement, all of them, we mark them on the impulsive move. So this one here is our major inducement, and the scenario is pretty much clear. Right here, if I am to mark the order flows, of course, this one here is the extreme order flow, and the next order flow is this one, which is the decision order flow because it is the swing that actually caused the break of structure. And of course, the last one is the SMT, which occurs before the inducement, and we usually not pay any attention of the reaction happening here. And this one here is actually an invalid one. So that's a easy scenario, and I was just wanting to make you guys remember what we have covered before we actually cover the modification. And exactly right here now we have covered that, and we are now into the next scenario right here. All right, so this one here is our next scenario, and we can clearly see, of course, the procedure does not change. Take out of inducement, this one is confirmed to be a swing point, and if price reverses and breaks past the swing point, then our break of structure, of course in this case to the downside, is confirmed. All right, so where is our inducement? Because we know after the break of structure, our next step is identifying the inducement. We can clearly see that this one here is the recently formed valid pullback, and most of you guys will identify this one here as your inducement. But in this case, you will be wrong because you can check here that this here is happening. You can clearly see here there is this order flow, and this one here, this pullback, is inside this order flow. And in this case is when now we don't use this one here, we use this one here, because this pullback was engulfed inside this order flow. If that wasn't the case now, and let's say price broke past this low, I mean this low right here, then in this case this one here will be now our inducement. And since this occurred before the break of structure, of course now it will be our minor inducement, and of course the trading range high, which is this one here, will be now the major inducement. And so if we were to identify the order flows in this case, then this one here of course will now be our extreme order flow, and in this case we can clearly see it's mitigated, so this means it's invalid. All right, let me get rid of all of these, or let me just leave that one and this, or let me just leave it that way. All right, so this one here is our mitigated order flow. You can clearly see here it was mitigated by this valid pullback, the retracement inside this extreme mitigated order flow. And so our extreme order flow now, or we need to shift to the next, of course, because this one here is already mitigated. And so shifting to the next, this one here becomes our extreme. But now this order flow will not be a valid order flow, and we cannot rely on this on taking the entries because it occurs before the inducement, and this is an SMT, and we cannot use this here as a valid order flow. I know you'll be, someone else will mark this one here as now the order flow, this one here, but that's not the order flow. The order flow is all of this one here. This here is not an order flow. The order flow is this one here. Take note of this. This is very, very important. So this one here is the order flow, and you can clearly see that this order flow is occurring before the, you can clearly see here, this here is our the inducement. So exactly right here, this here cannot be a valid order flow, but in that case an SMT. All right, so let's move into this next diagram exactly right here. And the procedure is just the same. This is a valid break of structure. You can clearly see inducement taken, swing point, price reversing exactly here, and breaking past this one, confirming this one as a bearish break of structure. All right, so where is the inducement? Exactly here. This is the inducement. And in this case is the major inducement. Why major? Because it occurred after the break of structure. And you can clearly see that our corrective move is a one leg, exactly right here. Checking this previous scenario, our corrective move was either a double leg or a triple leg. Like in this one here, this here was a double leg. You can clearly see the first leg, a pause, then and the other leg. So this is a double leg, but this other scenario, you can clearly see that our corrective leg is like one, is a single one. So in this case now, where is our order flow? How will we be marking the order flow? All right, so this here is pretty simple. This is our SMT, and I know someone here will mark this one here as the extreme order flow, but in this case you'll be wrong. Even if you mark this one here as the extreme order flow, you'll still be wrong. You can clearly see that our corrective move, it was a one leg. It didn't have even a single valid pullback. So this means that all of our corrective move is now supposed to be the order flow. All of this one here will now be the order flow, and in this case then it's mitigated exactly right here. And so in this impulsive leg, there is no any order flow, because this one here is our major inducement, and this one here is of course the inducement. All right, so in this other scenario, you can clearly see it's also a one leg, and in this case, yeah, this is the inducement. Yeah, so that's the inducement. And yeah, that's the inducement. Right, the inducement, because it is the recently formed valid pullback high, and the liquidity resting above there, it's what we call the inducement. Now let's say a scenario like this, yep, like that. And let me take the polyline and do something like this. All right, so where is now the, in this scenario, where is now the inducement? In this case, someone else will mark this one as the inducement, but that's not the inducement, guys. The inducement in this case is this one here. Take note of that, and this is very, very important. And why should we consider this one here as the inducement? Is because this one here is engulfed. I mean, this, we cannot use this high as the inducement because it's engulfed inside this order flow. You can clearly see here this order flow. I know you can see a second leg here, and someone else will see this one here, will refine this one here to be the order flow, and so that now he can use this one here to be the order flow and mark this one here to be the inducement now. But in this case, you'll be wrong because the order flow you're marking is wrong, and the order flow that needs to be correct is this one here, and that's now the correct order flow that you should be using. You should use the whole of this. Same right here, this one here is supposed to be the order flow exactly right here, but now all of these, the ones that I'm marking, these are not the, like, we will not be using these as the correct order flows, because you can clearly see that our corrective move is made up of a single leg, and so this means that all of these are just minor order flows. So this means that in this scenario, we will only be considering the order blocks. And also in this scenario, our minor inducement is this one here, and our major inducement is our external liquidity. All right, so guys, what if the scenario was like this? All right, the same, this doesn't change. Price has taken out the inducement, and this here is our ultimate break of structure to the downside. This means now our trading range ranges from that high and currently ending here. So now, which is now the minor inducement? You can clearly see inside here the internal structure. Price took this high, and you can clearly see also a break past here. And now, which one here will you be using as now the inducement? Yeah, I mean the correct inducement. You can clearly see the same procedure here happened, and we know that if price takes a high and makes a break, I mean reverses and makes a break past this low, then that's a break of structure. So in this case, which now will we be using as the inducement. Most of you guys will mark this one here as the inducement, but you will be wrong. This one here is the major, the inducement. In this case is minor because it occurred before this one here, before the break of structure. So this one here will be our minor inducement. This here is not the correct inducement, not unless now price broke the structure. In this case, by a break of structure, it broke the structure of this low, this low here, and so it was like this. So in this case, now you can use this one here to be now the correct inducement for our overall structure. But since that's not the case, and the case is like this, then in this one, you will not be using this one here to be the inducement, but rather this one here to be the inducement. And so for the same scenario, let's mark the order flows. All right, so the order flows in this case, it's easy. You can see the corrective move is a 2-leg. You can clearly see the first leg is this one here, and we had a pause, and then we had the second leg. So that was a double leg. The retracement was a double leg, and this means now our order flow is this one here. The extreme order flow is this one, and in this case it's not mitigated, so this means it's valid. And all right, so the next order flow that comes after it, I know someone else will mark this one here to be the next order flow. You will be wrong. That's not the correct order flow that you'll be marking, but rather the correct order flow that will be marking it's all of this structure, guys. Remember, price has yet broken the structure. So in this case, even though this is a whole structure, but the whole structure is in between our mother structure. So this is just a child structure, and we'll be using all of this from this low all the way to that high. The correct order flow is all of these swing. Don't use this one here as the order flow. In this case, we'll just be refining the order flow and we'll be making wrong decisions. So just use all of this one here to be the order flow. And all right, it will be an SMT, of course, not unless price creates another valid pullback down below here, so that it can now become something like this. And now in this case, then this one here will now be now the decisional order flow, so that our inducement now changes from where it is. That's now the engineering liquidity. In this case, this one here will now be the engineering liquidity, and our inducement will now be this one here. And in this case, now this one here will be now our decisional order flow. So guys, practice this. This is very, very important. Before now I dive deeper into now identification of POIs based on our marking of this one, because later you will realize that even though this is the extreme order flow and this is the decision order flow, and we say that if a trading range contains these order flows, the order flows are unmitigated, then in this case we completely ignore the order blocks. But in this case now, an update has happened that we don't ignore the order blocks. We use the order blocks even if the order flows are still unmitigated. In this case, this one here, of course, will be now our decision order block, because it is the one that caused the break of structure. So exactly right here, that's the decision order block, and the extreme order block, it will be somewhere here. So let's say now price comes to mitigate our decisional order flow without diving deeper into our decisional order block, and gives a reaction, and then later fails this reaction and goes towards our decision order block. Of course, you will see some reaction from this, and this order block can be used as a reversal point. I know based on the previous playlist, I say that this order block is invalid because the order flow in that case failed. But now here is the update. This order block is valid, and if you see a reaction, a pretty much good reaction, you can take the trade all the way towards the external liquidity, and it will be valid. Even though there is the extreme order flow up here, this decision order block is still valid, and a reaction from it will still be used for the reversal, even if this order flow is on point and not mitigated. So guys, that's it. And if you are yet understood, worry less, because on the next part I'll be explaining deeper of what I have explained on this last representation, so that you guys can have a solid understanding of True SMC. So guys, if you have learned something, drop a like and see you in the next part.